Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, February 24th, 2011. Well, folks, the markets are grinding slowly lower here across the board as we continue to watch them just go lower here. Now, the Dow is down about 80 points on the day, just above the 12,000 level. And again, that 12,000 level is going to be support. Notice how the markets are right now holding on to this double bottom range from yesterday. We've hit it about 1, 2, 3, 4, 5 10-minute candles in a row, and again, that is currently holding. If this breaks, then you should see the markets make a pretty substantial move lower. The next major support level I have is down here at 130 on the SPY, and then after that, you have a pivot double bottom and a gap window right here at approximately 129.50 to 60. So those are your next couple levels, but notice the double bottom right now that you're forming here. Again, very intricate, very key. The sharp move down, the nice bounce yesterday, and then a more downside today coming into that double bottom. All right, now let's again zoom in here and get exactly what's going on. What's causing the selling today? Continued fear over the Middle East. The dollar continues to be on the shaky ground that it has been, which again was a unique thing that we discussed in last night's video to the Research Center, where the dollar is no longer the secure currency of the world. It's clearly showing that over the last couple days. Take a look at the chart here, folks. This is the dollar over the last 2 days. Since everything's been going on globally in the Middle East and Northern Africa, we have not seen the dollar rally. This is the first time that I can remember this happening in history right now, folks, since the dollar became the major reserve currency for the world. What this tells us is a major event now unfolding. The dollar no longer is being kept as the reserve currency. When things go bad, people don't rush to the dollar. They continue to sell the dollar. That's very bearish in the long term for the dollar, something that must be watched. Now, again, if things get really, really crazy in Europe and Asia, you never know. I think you'd still see a little bit of a bid, but I think it is significant to see with just a little bit of disruption in the Middle East right now, you're not seeing the dollar go up at all. In fact, it's continuing to sell off. So watch that. That's a major event, and again, we brought that to you here. I discussed it last night before any of the media was on top of it. I heard some of the media discussing it this morning a little bit as well, but very, very important here. All right, going back to the SPY, the markets continue to hold on to this double bottom level right here. Again, we'll see if we break through this level. We're just a little bit off the double bottom or the lows of the day right there by about 12 cents on the SPY. But again, the key today, again, has to be oil. The USO is trading up 50 cents. It is off the highs of the day, but we do want to watch this. As oil goes higher, the market goes lower. Why? Because for every $10 up on oil, GDP goes down 0.5%. That's huge, folks. I mean, that's huge. And remember, the more oil goes up, the less people are going to travel, the less people are going to buy. This is exactly the opposite of what the Fed's been trying to do. So this is almost a major event going on in the face of the Fed against the Federal Reserve. The Fed's trying to pump massive money into the market to get people to feel richer, to spend more, and get their 401ks up. And in the opposite side of the coin here, we have oil doing that and going up, and that's making people have to pay more for gas, pay more for heating their house, and all these other things. And therefore, again, we see people having less money to spend by going out and, ultimately spend on goods when they have to fill up their gas tanks and such. So again, very, very key little thing here. As oil goes up, markets are going down. Again, we are basically at $100 per barrel. We were as high as $103 per barrel overnight, but that did fade. And you can see from the open today, it faded. That's when the market was moving up. Then as soon as the oil trade started to move back up a little bit, that's when the markets came back to the lows. All right. Now, some stocks are selling off today. ExxonMobil is seeing a little bit of selling after some major, major gains yesterday. You can see this is actually a little bit of a bear flag on ExxonMobil right now. We'll continue to watch that. Chevron, on the other hand, is actually up a little bit today, so it's very unusual to see this divergence. We see Chevron holding steady here, basically flat on the day to slightly positive. Exxon, on the other hand, continues to be in sell mode here. ConocoPhillips, also sell mode. Take a look at that, and we called this beautiful gap fill right here, guys, as a buying opportunity. So again, a great little buying opportunity here on the Chevron or the ConocoPhillips chart, and again, we'll watch and see how that all trades out. Now, a couple other things to go over here in respect to what this market is doing. We are seeing research in motion higher on the day. Take a look at this, up 75 cents, but it is off the highs right now and coming back in. Keep an eye on Baidu. BIDU is also showing some relative strength today, even with the markets down. Overall, NASDAQ stocks are not getting hit too much. they're really not getting hit too much here. You have Apple down, but Baidu, Amazon, RIM, Intel, and Microsoft are all positive on the day. We do see Cisco, Dell, IBM lower, but overall, I guess Hewlett-Packard's one of the key levels here as well. Take a look at Hewlett-Packard. Hewlett-Packard is selling off, although it's right around the double bottom here at 42.50. Take a look at the daily chart. Again, there's actually a key little level right in here that you want to watch for support. A little bit of support right here. If Hewlett-Packard drops to about 42.25, that should be support. And then if it gets through that, I like it down here at 41. Those are your levels to watch. But again, Hewlett-Packard seeing down $1 today, seeing continued selling. All right, let's see what else is going on here in the market. And again, it's all about oil, all about watching the dollar and how the dollar is trading during this crisis in the Middle East. And again, does this spread to Saudi Arabia? That's really what it's all about, folks. If it ends with Libya here, yeah, oil prices are up a little bit because production's been cut. They're 2% of the global production of oil, but it's all about Saudi Arabia. If it spreads to Saudi Arabia, I expect oil to go to 125 to 150. If it doesn't, then you should see eventually oil come back down to about $85 to $90 per barrel if things really get quiet over there. All right. Overall, I would not be shorting oil, folks. I mean, bottom line is, even though it's had a tremendous run up, you just can't go out and short oil at this point. Just imagine if you wake up one morning with something going on in Saudi Arabia, you'd just be in so much trouble. And again, I said that last week when we were down here. I said, just whatever you do, don't short oil. And thank goodness I said that. My members in the research center did not short it, and therefore they are surviving and, again, profiting on various trades that we've called out. By the way, one of the biggest trades here, folks, take a look at this. Royal Energy. I gave this out yesterday right here. This was my buy price yesterday, Royal Energy. $2.25. It hit $6.07 today. Small oil plays are unbelievable. PDO, take a look at PDO here. Look at this chart. Take a look at BDCO. This is another one we've talked about in the chat room. Look at that move from basically $2.50 to $8.50 in 3 days. Holy cow. All right, so again, small oil is the place to be, obviously. And again, we will continue to watch that. Even my favorite here, which I've given to the research center many, many times, DPTR, I gave it 72 to 73 cents down here. Take a look. Trading at 85 cents now on the day. Beautiful move on DPTR. All right, so again, the money is being made. We talked about solar stocks today. FSLR is up today about $1.79. Now, why would FSLR be up? Why would solar stocks be doing well in the face of higher energy costs in terms of oil? The answer is very, very easy, because the higher oil goes, the cheaper relative to oil alternate energy becomes, particularly solar. So again, you can see the solar FSLR charts had a great run, and again, it is up today when the markets are down. The reasoning behind that is because solar now is becoming cheaper relative to oil, therefore more people are likely to go to solar panels, install them, and therefore that's good for the companies there. Now, if oil falls back down, you may see solar stocks come back in a little bit more. But as long as oil stays around 100 and maybe even moves up, solar should remain relatively strong. All right, ag stocks are also doing decently today. You can see they've had a big tumble. Yesterday you hit the 50 moving average on potash. This is the daily chart of potash. And then today it's basically flat when the markets are down. And look at the huge bounce you got yesterday on POT. Bottoming tail, pierce to the 50 moving average, no-brainer long right there. The reason why potash and a lot of these ag stocks are doing well, the fertilizer stocks, is because people don't stop eating. I mean, think about that, folks. I mean, you know, oil continues going to 115 bucks a barrel. All right, so people are going to cut out traveling. They're going to carpool. They're going to, maybe not buy that new TV right now. They're going to do other things like that. But you know what? They're not going to starve themselves. They're not going to starve themselves. So the ag stocks will continue to be decent areas on any pullbacks to be looking for. Obviously, you got your pullback here, and it's bounced. Now I'd probably wait to see if you get a secondary pullback for an entry on these. But that's the thought process there, and it makes sense. And that's what it's all about, folks. Understanding the markets, really understanding it, reading outside of the box or watching outside of the box to make sure you're profiting as you should. All right, silver today, down about 31 cents. Those of you in the research center, you know I've been pretty bearish on silver ever since yesterday or so. And again, you can see this coming in a little bit here on the silver trade. My thought process on silver is simple. As oil goes higher, oil continues to hurt production of everything in the world. Basically, you're gonna sell less TVs, you're gonna sell less couches, you're gonna sell less of everything because people have less money. They're putting more money into their gas tank. So silver is a production metal. Now, it's also a store of safety, but it's also a major reason why silver is up so much is because it's a production metal. It goes into many, many things out there. If oil continues up and people buy less goods that have silver in them in some respect, then obviously we're going to see silver come back in Again, that's a very key thing to understand as well. Now, yes, it's also an inflationary hedge, but the run it's had, I mean, if you take a look at silver here, it's not just the inflationary hedge that's run it up like this. I mean, literally from 17 bucks to 33, that's not just inflation. All right, you haven't seen gold literally double in the last 6 months. Yes, gold's gone higher, but not double. So that tells you that it's more than just the inflationary hedge. It's also the production issues out there. And because things are so bullish in the global economy, this thing has gone monstrously to the upside. All right. Again, if oil stays high, I do think, and again, if oil continues higher, I do think ultimately you will see silver pull back a little bit more and come back into about $30. All right, folks. Enough said for today. Enjoy. Come join the research center. Come join the intraday stock chat. Remember, we have a free trial to offer. Enjoy. Talk to you later.